There has been a lot of buzz online surrounding the newest crypto-related legislation. Today's video is centered on the European Union's voting decision between proof-of-stake and proof-of-work cryptocurrencies. The ban on proof-of-work could eliminate Bitcoin from most European exchanges. We're going to cover the differences between proof-of-stake and proof-of-work, the important parts of the bill, and the opinions from some big names in the crypto space like Saylor and Elon Musk. Make sure to stick around till the end, because we're going to explore what future legislation might entail. Welcome back to Profit Protection. On our channel, we bring you news about ideas and information from the thought leaders in the financial world. We break down headlines about financial markets, cryptocurrency, and digital assets from the people who understand them the best. If you found this channel educating and entertaining, we would appreciate it if you liked and subscribed. This is the easiest way to support us so that we can continue to bring you high-quality content. Before we dive into the details of the bill that the EU Parliament was voting on, let's clear up some important definitions. You might have heard of something called proof of work or proof of stake. This was the main focus of the bill. There's been a little bit of controversy around proof of work due to its energy consumption. Proof of work is an important protocol for Bitcoin and other older cryptos like Ethereum 1.0. It is the process by which crypto is earned and validated. Essentially, a Bitcoin miner must use computing power to solve complex and difficult mathematical problems to earn Bitcoin. Because you can't fake energy consumption and computation, it's a great way for Bitcoin to self-distribute. The blockchain keeps a record of who mined which Bitcoin, and it only allows those who have spent the necessary energy to earn coins. Unfortunately, the energy consumption of these Bitcoin mining operations has brought it under a lot of scrutiny. The UK website Money Supermarket released a report detailing the cost of Bitcoin transactions and found that it averages out to roughly $176. They added that each Bitcoin transaction consumes 1,173 kilowatt hours of electricity. That much energy could power a typical American house for many weeks. As you can see, this could leave a bad taste in people's mouth. Although other financial systems like Visa require multiple energy-consuming layers within a system, that's not going to stop groups from opposing Bitcoin's energy usage. One of the solutions that's gained a lot of traction in recent years is the alternative proof-of-stake method. Proof of stake is a little more complicated. At its most basic, the process can be described as people pledging their coins to verify transactions and earn more crypto. In a blockchain that uses proof of stake, anyone can nominate themselves as a verification node. You do this by staking your crypto to the verification node. When there is a block of transactions that are ready to be verified by the blockchain, this person who staked crypto to the node will be selected and be used to compute and verify the transactions. In return, they get more crypto. Of course, the more crypto you stake, the more likely your node is to be chosen for verification. It's a little complicated and technical, but the bottom line is that proof of stake requires much less energy. It's still quite secure because incorrectly verifying transactions results in whoever owns the node losing part of their pledged crypto. Those who have a node are incentivized to make sure it's working correctly. For these reasons, the European Union gathered on Monday, March 14th to vote on whether it was necessary or not to ban proof-of-work cryptos. This would essentially eliminate Bitcoin and other major coins from being mined or used in the EU. While it wouldn't be a death blow, this would certainly put a dent in the crypto's growth. So, what exactly did the EU bill say? The bill itself has gone under a few small revisions. It was drafted up once before, but has been changed to feature softer language. According to a version shown to CoinDesk by government officials, it says that crypto assets shall be subject to minimum environmental sustainability standards with respect to their consensus mechanism used for validating transactions before being issued, offered, or admitted to trading in the Union. As you can see, the bill doesn't explicitly name Bitcoin. Despite this, it may as well include it by name. The energy consumption of Bitcoin is far and above the limits that the EU is looking to impose. While this may be good for the environment, it certainly isn't good for decentralized finance in Europe. There have been a few heavy hitters coming out of the woodwork to throw their 2 cents in on the situation. Saylor, the CEO of MicroStrategy, sent out a scathing tweet on the 12th of March detailing his concerns over the EU banning proof of stake. His company currently holds over $5 billion of Bitcoin to store its capital. He tweeted, "The only settled method to create digital property is via proof of work. Non-energy-based crypto approaches like proof of stake must be deemed to be securities until proven otherwise. Banning digital property would be $1 trillion mistake." Michael Saylor brings up a great point. Through proof of work, anyone who wants to earn the cryptocurrency must take their own computer system and have it solve computations. This is inherently decentralized and ensures that the production of more crypto is in the hands of whoever so wishes. In contrast, proof of stake creates an environment that leans more towards centralization. The blockchain program prioritizes those with large amounts of crypto staked to their node. This means that as the richer users and groups accumulate more and more Bitcoin, they will command more control over verification and the earning of new Bitcoin. This is not an issue in and of itself. Still, like any system that we live in, the fundamentals that affect everyone, like the verification of transactions, will naturally become controlled by the most powerful. This is a byproduct of a system set up like proof of stake. Elon Musk, another huge name in the crypto space, isn't fazed by recent legislation. He's been a huge supporter of crypto since the get-go, despite his nuanced viewpoints. For example, as the CEO of Tesla, Musk purchased over $1.5 billion of Bitcoin as a store of wealth for his company. Soon after, he said that he would not be allowing Tesla to use it for transactions until the energy efficiency problem was solved. He had a conversation with Michael Saylor on Twitter, spurred by inflation numbers. He and Saylor went back and forth, discussing what was best to be held as a hedge against inflation, and naturally, crypto was inferred to be one of those things. The last reply Elon made said, "As a general principle, for those looking for advice from this thread, it is generally better to own physical things like a home or stock in companies you think make good products than dollars when inflation is high. I still own and won't sell my Bitcoin, Ethereum, or Doggy for what it's worth." Here we see two positions of people controlling billions in Bitcoin. Both agree that digital assets are a smart move. Michael Saylor is quite adamant about educating the public on the importance of proof of work. Musk, on the other hand, doesn't seem overly concerned, yet stands by his decision to hold crypto. All of this happened the day before the EU vote. With proof of work and Bitcoin's European existence on the line, what did legislators decide? After a short voting session, the bill was not passed. It lost by a majority of 30 to 23 votes. This was a big win for European Bitcoin holders and those around the world. It isn't totally over yet, though. The Monetary Committee voted by a slim majority to have new alternate legislation brought to Parliament. They are asking for a legislative proposal to amend the bill with a view to including in the EU Sustainable Finance Taxonomy any crypto asset mining activities that contribute substantially to climate change mitigation and adaptation. This must be introduced to the Parliament by the first of the year in 2025. During that time, the arm of the EU that is responsible for introducing new legislation will look to draft a new bill that curbs the environmental impact of cryptocurrency. You might be wondering, is future legislation going to put Bitcoin in danger? The answer is yes, but it's not quite that cut and dry. The fact of the matter is that Bitcoin does require a lot of energy. This energy is produced by the majority of the time through methods that are not environmentally friendly. As more groups fight against Bitcoin and other cryptocurrencies, this will become a hotter and hotter topic of debate. So what's the answer? It depends on who you ask. Some diehard enthusiasts will not stand to see Bitcoin change one bit. Others see possible solutions. The hardest part about changing Bitcoin is that it needs a majority decision to be made. For a new iteration of the Bitcoin protocol to take effect, there needs to be consensus between most of the community. Changes to Bitcoin is not made by one governing body or even by Satoshi Nakamoto, the inventor of the cryptocurrency. It is built in a decentralized fashion, meaning that if a change needs to be made, everyone has to be on board. The process for this is very technical but not impossible. There's plenty of legislation that could threaten Bitcoin's existence. The environmental argument is only one front on which it is fighting. Many national governments feel threatened by their inability to exercise power over this new alternative market. Take China, for example, which banned all mining and transactions of cryptocurrency within its borders. If you would like to learn more about how countries may react to legislation toward Bitcoin and other cryptocurrencies, you should check out our video on how Ray Dalio believes crypto may be outlawed. There we go into more depth on the different ways a ban could be implemented. Regardless of the path future Bitcoin legislation takes, crypto is here to stay in one form or another. Blockchain technology and digital assets are paving the way for new forms of currency and investment. That's why this channel was started. Profit Protection is here to help you gather the latest and most important developments and ideas from thought leaders in the digital assets, finance, and crypto markets. If you enjoyed this video and learned something, we would really appreciate you leaving us a like and subscribing to our channel. Remember, this is not financial advice. Profit Protection is here to help you educate yourself further as you put the work in to make a change to your financial life. Happy researching. See you next time.